Hi, my name is Holly Penal. I'm the owner of Camp and Craft, an event planning, marketing, and consulting business. And today I'm here with Ventures to share with you some information about important business concepts. Now, if you're starting a business, you've probably thought a lot about what it is that you're going to sell, whether it's a product or service, but you still might be wondering about how you should price that product or service. Well, today we're going to do some calculations and talk about some important terminology so you have a better understanding on what to charge for your product or service. By the end of this video, you should be able to define the terms unit of sale, unit cost, unit price, and unit profit. You should understand how to calculate unit cost and unit profit, and you should be able to explain and understand how to calculate break-even point. What is a unit of sale? A unit of sale is a standard quantity of measurement used to sell a product or service. It represents the basic building block for pricing, costing, and profit calculations. Here are some examples. It could be a single item, like a jar of jam. It could be a set or package of items, like a basket of fresh produce. It could be an hour of time, as in 1 hour spent working for a client. Or it could be a complete project, like a videographer producing one video for a client. Unit cost is the cost to produce one unit of sale. It includes costs directly associated with producing the product or service, but not operating expenses or overhead like rent and utilities. Let's take a moment to learn how to calculate unit costs. Let's say that I have a side hustle making artisan jams, and I want to know what it costs for me to produce one jar of jam. Well, my recipe calls for producing 10 jars of jam, so I get the ingredients 10 jars at a time. I've got the berries, the tea, sugar, lemon, pectin, cinnamon, the glass jars, the lids, and the labels. And when I add that all together, it cost me $37.82 to make 10 jars. Well, one jar is 1 unit of sale. So I'm going to divide that total cost for 10 jars by 10, and that gives me $3.78 per unit. So our unit cost for each jar of jam is $3.78. Knowing our unit cost is essential in determining the unit price. Unit price is the amount of money your customers pay for 1 unit of sale. It probably makes a lot of sense that we're going to make sure that our price is greater than our unit cost. We want to make sure that the money we're bringing in is more than the money we're spending to make our product or service. Some other factors that we might consider when pricing our product or service are local competition, product quality, experience, education, and expertise of a person providing a service, the ambiance of our business, and the location. You'll notice a lot of these have to do with customers' perceptions. If we are selling a product that is perceived to be of higher quality than our competition's, then our customers will probably expect to pay more for that product. If we are in a service industry and we are new, based on our experience and expertise, folks might expect to pay less for our service. Once we've calculated unit cost and have determined our unit price, we can then calculate unit profit. Unit profit is equal to unit price minus unit cost. In our example of our artisan jam business, we've decided to price our jams for $15 per jar. Remember, they're artisan and quality, and our customers expect to pay a little bit more for them. So when we take that $15 price per jar and subtract out the $3.78 unit cost per jar, we get a unit profit of $11.22. That means that the profit per jar of jam sold or per unit sale is $11.22. After we've priced our product and we know our operating expenses, our owner's draw, and our unit profit, we can calculate the number of units you have to sell in order to break even. That's neither make a profit nor operate at a loss. We call this the break-even point. We find the break-even point by adding our operating expenses to our owner's draw and dividing that number by our unit profit, that profit per unit. That gives us the number of units that must be sold in order to break even. A quick side note, please refer to the expenses and owner's draw video in this series to learn more about those concepts. Let's go back to our business of selling artisan jars of jam as a side hustle. We've estimated that we will spend about $550 a month on our expenses. That's things like insurance and farmer market fees to have a booth, etc. We've also decided that we'd like to pay ourselves $500 a month. So when we take our monthly expenses and add that to our desired owner's draw, we get $1,050. That means that we need to earn at least $1,050 a month to cover our expenses and our owner's draw. Now, to get our break-even point, the number of units that we have to sell to cover our expenses and our draw, we take that $1,050 and divide it by our unit profit of $11.22. That means that we need to sell at least 94 jars of jam to break even or cover operating expenses and our owner's draw. Whenever we get this number, it's a good time to ask, is that realistic? Well, if you know you do on average 2 farmers markets a month and you sell on average 50 jars of jam per farmers market, then we can say, yeah, we expect to sell at least 100 units a month. And then therefore, this is a realistic break-even point. Let's take a moment to review. Unit of sale is a standard quantity of measurement used to sell a product or service. Unit cost is the cost to produce 1 unit of sale, not including overhead. Unit price is the price your customers pay for 1 unit of sale. Unit profit is calculated by subtracting unit cost from the unit price, and the break-even point is the number of units you must sell in order to break even or to cover your expenses and your owner's draw. Thank you so much for watching. To learn more, visit us online at venturesnonprofit.org.